Welcome to the Trading Market Technicals morning call video for Monday, January 13th. Very muted reaction on the non-farm payroll data that came out on Friday. It was actually a dismal number, 74,000, respecting well over 220,000 jobs created. They were talking about the weather was a big factor, and usually that's what the usual excuse is for a data report or retail. But anyway, nonetheless, the jobs data was horrific. But the Dow really didn't do much of anything. I mean, we did sell off a little bit, but closed down 7. Nasdaq up 18, S&P up 4, and then the Russell up $6.18. So a very muted response. But that is really interesting, and that's I've read a lot of the financial newspapers over the weekend, and they were just basically stating that how was the reaction. They don't a lot of the fund managers are not really certain how to react to that. So we'll see what happens this week. However, we remain above the 20-day moving average in the indexes. We remain well bid up in the marketplace. So I do think that the markets are poised for at least one more push higher, and then we would reevaluate. And again, just the way the markets are looking on the charts is the reason why I'm getting that type of indication that the markets may run higher. But I'm going to run through some charts. I'm going to show you a couple of indicators here. Not much going on. I mean, as far as the indicators, really not telling us much of anything, other than the fact that we still have, a good spot to move higher. Now, here is the VIX. As you can see, VIX has been in this lower end of this range, actually within this parallel horizontal channel, pretty much all of 2013, and now we're still hovering below this area here. Now, I do feel that things are going to change rather quickly, and there's going to be some great opportunity for the traders and investors in the coming weeks. Now, obviously, the markets are very quiet. That's actually a real good thing because it has digested its move and looking for the next move. And right now, the next move probably is higher. But we'll get to that in a moment on the chart segment. Now, if you see the New York Stock Exchange new lows, I've been watching this since pretty much most of latter part of 2013. You can see we just can't break this area. So every time we start to spike up, new lows are being made, it reverses, and we start making new highs. So keep an eye. We're going to continue to keep an eye on some of these key indicators. Stocks above the 50 continue to coil in this area here, and again, at the upper end of the range, you tend to usually get that sell-off at the 80 percentile. Not quite there, but we are on a buy signal here. So just watching a couple of good key indicators. Now, I wanted to speak about, I've been telling everyone in the morning call video about gold, oil, and precious metals in certain sectors, and I'm going to go over them. But what I wanted to show you on the report of the non-farm data report, the dollar really took it on the chin. Now, one day doesn't make a trend change, but if this is something we're going to watch. If the dollar continues its weakness and continues to sell off, dollar is down now as we speak in the pre-market session, but if that continues to go lower, that will definitely put a bid in equities and for sure commodity prices. Okay, and speaking of commodity prices, we talk about gold. Now, gold here as of right now has alleviated its bearish symmetry. As you can see, lower lows and lower highs. We broke this bearish channel, and now we flagged and we broke back above it, which caught the 50-day moving average. I still would not be looking to buy gold at this point, at least not yet. I would like to see a move higher and the next pullback make that higher low from this area. That would kind of solidify the fact that we broke bearish symmetry, and then we would move higher. But as of right now, I think the better candidate would be silver. And the reason why I say that, silver held up much better, as you can see, part of 2013, and has created a base for 6 weeks, and is basing at the 20-day lows, as you can see. I say a break above $20.50, silver will easily get to the 21.77. Now, seasonality, January and February are very good for gold, and actually bodes better with silver. So keep an eye on silver. It is a little bit more volatile, but you can trade that via the SLV, the ETF. So I definitely like that. And the reason why, you get the confirmation from palladium. Now, palladium is our silent leader, right? We talked about this many times. Palladium now, watch that, because if it starts to break out here, this will confirm what my thesis is on the metal trade, okay? I don't like oil at the moment, and let's go right into it. Actually, let me before we get into the oil, let's just go through the index. I want to show you where we are. We're still hanging out at the 1272 extension from the high to low here, back from 2009. This is a very big deal, guys. This is something that it's going to be interesting to see if, in fact, that we can break higher here. I think that the markets at one point are going to be due for a pullback. Now, again, we're at 1820, 1832 right now, trading in a pre-market down 5 handles, as you can see here in the upper right-hand corner. Even if it got to 1740 on a monthly chart, you are still in a comfortable uptrend. Remember that. So it would not be chasing or looking to pick a top in this market. Especially, you still have POMO auctions going on where the Fed injects billions of dollars into the market. So I would not be looking to do that at the moment. Okay, but let's go look at the daily chart. Now, daily chart, we've had these bull flags. As you can see, we did break down lower, but we held this channel. This trend line, and we are now still comfortably above at the 8 above the 20, 50, and 200. So remember, and what we've been doing the last 4 days is really just consolidating. Hey, sure, we may have a down day today. We might move lower, but I think in the big scheme of things, I think we might get one more push, which I would love to see the market push higher, make new highs, and then fail. And then that's what's going to happen. You're going to get everybody, all the retail crowd, involved because we're going higher, we're not going lower. At these levels, and then once they break and you start taking out this area here, which I have marked on the 1 hour chart, which is the 1820, that's when you're going to get a real big flush to the downside, which again would still be healthy for the markets. Okay, so 1838 I'm looking for, or 1820 still remains, and as you can see, we have literally been in a sideways consolidation since January 1. Now we've sold off. We've recuperated, and then now we're back in channel, but we have done nothing so far in January of 2014. So I think that the markets are ready, and they're going to start making moves again. So that's where you need to be prepared. You don't have to trade every single day, but this is something that we want to watch. Either break out, okay, and in the meantime, you want to look for quality setups, good stocks that have pulled back, maybe had an earnings miss, a downgrade, or a negative talk on CNBC. And look for those stocks and look for an entry to get involved. That's your best trade right now until the markets can actually correct itself, and then it starts to get easy again. All right, let's talk about the spiders. As you can see here, we're still above the 8, well above the 20. And again, when you're above that 20, 8 and 20, and you have the 50 and the 200 all promoting higher, it's really tough to start looking to get short the market. Okay, but here's a good example: sideways consolidation, inside day, all of last week. So now it's a wait and see game here. But I do think that we're going to probably pop one more time to the upside, and obviously that might not happen. So I'm just looking at what I'm looking at here through the charts. Okay, so still above the 2012 highs, this uptrend line. Now we're starting to pinch on the Bollinger Bands, telling me that we energy's building here. So keep an eye on the Dow Jones, and we'll just keep an eye and see what happens with the prices moving higher here. Okay, and we have the transports doing very well. We have, obviously, excuse me, oil, which have sold off, which absolutely helps the transportation sector. And now that is making new highs. This is our leader of the indices that we follow, right, of the 5 that we follow, making new highs. This has to be a precursor of what's to come, I think, in equities. One more push higher, at least one more push, and then, of course, we'd reevaluate it. And let's take a look at IWM. Now, IWM, another one of our leaders, really hasn't done anything yet. But look at the Bollinger Bands, right? Starting to pinch here. I think that, again, we're going to probably challenge the upper end of this channel before we move lower. Again, you can see here above the 20-day moving average. All of the 5 indices are well above the 20-day moving average and sitting on the 8, which tells me that higher prices seem to be coming. And we have the Qs. You can see, look at the Qs. Energy's building here in the Qs as well. We have the Bollinger Bands. We had a nice big, we had a lot of volume come in here on Friday. Didn't go anywhere, but we have inside day the whole week again. But I do think, and you see what happened, it unwound its overbought reading. And we're still at the upper end of the range, but not so overbought as we were at the 97th percentile in the stochastics. Okay? Now we'll go right into the sectors. Now here's the GLD again. Now the GLD, again, sitting just underneath the 50-day moving average. Now we'll see the GLD is going to have to prove itself to get back above the 50 and then make another pullback, a bull flag sort of like this, and lower high, I'm sorry, a higher low. That is when I would be more interested in being long. I wouldn't want to do it here, just underneath the 50-day moving average. But this is something that we're going to be looking for higher prices in the GLD. Okay, now, if in fact that it does start to roll over, then that's going to be the entry to at least get short one more time for a big flush lower. I would have loved to see GLD flush much lower, but right now it's really not a good time to get long and or short this thing. Let's see what happens. If we break above the 50, get one pullback, make a higher low off of this low, then I would say for a trade, absolutely. And who knows, might develop into a bigger trade. Now here's the XLE. As you can see, we have this big bearish rising wedge. Now ExxonMobil is obviously heavily weighted in the XLE and obviously doing quite well the last couple of months. So this is definitely one of the components that are holding up the XLE. But let's see what happens if crude oil really takes it on the chin here. Maybe, just maybe, this might set up for another trade entry. But again, only bearish when it breaks the lower trend line. Okay, and here's the USO. And it's sitting right here, really not doing too much. And again, I think it needs more basing before we look to buy or look to get in. I think there's better stuff out there at the moment, but definitely keeping an eye on USO, the crude oil. Now, the builders. Builders are doing well with the non-farm payroll numbers. They did well on Friday, as you can see here. Nice pullback in the XHB, which is the home building ETF. Sort of like a bull flag, as you can see. Now let's just see if this starts to move again. I think, and I keep mentioning it from December, I think the home builder is going to be a real good trade. That's Lennar. Here's Pulte, PHM. This is another one of my favorites, as you can see. Breaking out of a bull flag here. This is something that I would be recommending on any type of your trade setup. I would recommend buying the PHM. I like the PHM here. And of course KBH, which I really like because this hasn't really gone anywhere yet from the first move of the home builders. So the KBH I do like breaking out of that. And let's take a look at the banks and financials. Sitting at the upper end of the range here, energy's building. I do like the banks and financials, but I like them to come in a little bit more. You could see here as Citibank, letter C, as you can see here, had a big run. Now, if we can maybe retrace 50% of this move and then make a higher low from this low, that's going to be the spot to get in. So Citibank I like a lot on a pullback. JP Morgan I like a lot too, but really needs to have a little bit more work. I like to see it come at least from the previous high here, right around $56, $56.50, and then possibly get an entry there. Goldman's a little bit out of its way. Goldman also needs to come back in at least to maybe to 170, 72, 73, anywhere in here. And then we have Apple. Apple had that bear flag that we identified, broke down from the bear flag. So I would look to, basically look to for lower prices down to the 520 and then reevaluate it. As you can see, as we had this big base here. Okay. All right, guys, that's pretty much it. Hope everybody really enjoyed their weekend. I think the next couple of weeks you're going to see some good movement in the equity markets. When the bigger players start to digest this non-farm payroll number, I think you're going to see some movement and some rotation coming in and out of different sectors, which will bode a lot of opportunity for us. All right, have a great day, and we'll speak to you tomorrow. Take care.